Welcome to G2 Weekly Market Update, where we break down the key global market and economic developments you need to know across the US, Europe, China, Japan, and what it all means for investors as we close out the year. United States. US markets moved higher in the holiday shortened week, with both the S&P 500 and Dow Jones hitting fresh record highs. Trading volumes were light, but optimism around artificial intelligence and stronger economic data supported sentiment. Small cap stocks underperformed slightly, while gold and silver extended their strong year to date rally. On the macro front, the US economy grew at its fast pace in 2 years. Preliminary data showed third quarter GDP expanding at an annualized 4.3%, driven largely by resilient consumer spending. However, durable goods order fell sharply in October, weighed down by transportation equipment, even as core orders tied to business investment continued to rise. Consumer confidence weakened for the fifth straight month, reflecting concerns around job prospects and business conditions. At the same time, initial jobless claims declined while continuing claims edged higher, pointing to a labor market that remains stable but gradually cooling. In fixed income markets, US Treasuries posted modest gains amid range bound yields and holiday thinned liquidity, while investment grade and high yield corporate bonds benefited from improved growth expectations. Europe. European equities finished slightly higher in a quiet holiday shortened week, with markets hovering near record levels. Performance across major indices was mixed, reflecting uneven economic signals across the region. In Germany, the Bundesbank forecast a gradual recovery starting in 2026 after several years of economic stagnation, supported by government spending and stronger exports. However, business sentiment remains cautious, with surveys showing limited optimism among firms about the year ahead. In the UK, business surveys painted a mixed picture, while some indicators showed ongoing pessimism following the recent budget, others pointed to improving confidence. Japan. Japanese equities advanced, led by strong rebound in technology stocks on renewed optimism around artificial intelligence. Expectations for additional policy tightening by the Bank of Japan continued to build, even as inflation data came in slightly softer than expected. Government bond yields edged higher, while the yen strengthened modestly following comments from policymakers signaling readiness to act against excessive currency volatility. Bank of Japan Governor Ueda reinforced that further rate hikes are likely next year, provided inflation and wage growth continue to move towards the central bank's targets. China. Chinese equity markets ended the week higher, with gains across mainland and Hong Kong benchmarks. The week was light on fresh economic data, but recent releases continue to highlight weak domestic demand, particularly in consumption and fixed investment. Despite ongoing challenges from the property sector and subdued consumer activity, most analysts expect China to meet its official growth target of around 5% for the year. Looking ahead, growth is expected to moderate further in 2026 as structural headwinds persist. G2 takeaway. As we wrap up the year, global markets are being supported by strong US growth, easing inflation trends, and expectations of more accommodative monetary policy in 2026. However, beneath the surface, slowing consumer confidence, softening labor markets, and uneven global growth remind investors to remain selective and balanced going into the new year. Thank you for watching G2 Weekly Market Update. If you found this breakdown useful, like the video, subscribe to the channel, and stay tuned for the next update. See you next week.